I ran TrendSpider's full indicator suite across all three equity microfutures, MES, MYM, and M2K. 9 indicators, every time frame from monthly down to 15 minutes. I was looking for a trade. What I found instead was something more interesting. 3 charts telling the same story with one setup standing out from all the noise. Let me show you exactly what the algorithm detected. First, starting with MES, the Micro E-mini S&P 500. On the monthly chart, the long-term structure is still bullish. Price hit an all-time high near 7,418 before pulling back. The WMA is curling with price, the Donchian channel is widening, and the big picture trend is intact. Nothing alarming at the macro level. The S&P hasn't broken anything structural on the monthly time frame. Drop down to the 4-hour chart, and the story starts to shift. TrendSpider auto-detected an ascending channel on the 4-hour, and price is currently sitting right at the lower rail. The channel is still technically active, but the rejection from the upper boundary was sharp, and the candles on the lower rail are not showing strong absorption. That is a yellow flag. Here is where it gets interesting. On the 1-hour MES chart, TrendSpider simultaneously detected a descending channel and an ascending channel, both active at the same time. What that means structurally is that price is being compressed between a declining upper trend line and a rising lower trend line. That is a diamond pattern. A squeeze. The system is coiling. Whatever the next directional move is, it will be amplified. The Donchian channel confirms this. The bands are at their tightest in weeks. MES is not giving a clear directional signal right now. It is in compression. That means we watch, we do not trade it yet. Portfolio, moving to MYM, the Micro E-mini Dow Jones. Monthly context on MYM mirrors. AS. Strong long-term. Bull trend. WMA rising, price pulled back from highs near 50,000. The Dow is in corrective mode off the all-time high, but has not violated any major structure. The most interesting finding on MYM came on the daily chart. TrendSpider detected a cup and handle formation, the classic accumulation pattern. The cup formed during the Q1 sell-off, the handle deepened into April, and price staged a breakout attempt. That breakout has since retraced. The question is whether this is a failed breakout or a retest of the breakout zone before continuation. On the 15-minute MYM chart, the pattern is bearish short-term. Lower highs, lower lows, wedge falling structure visible. The WMA is pointed down, and price is consistently rejected at the moving average on each bounce attempt. Short-term MYM sellers are in control. MYM is giving a conflicting read, bullish on the daily structure, bearish on the intraday. That kind of conflict usually resolves in the direction of the larger time frame. Daily says, watch the cup and handle breakout zone for a re-entry long. Now M2K, the Micro E-mini Russell 2000. The Russell 2000 tends to lead. When small caps are healthy, the broader market follows. When small caps break first, the broader market usually follows that too. So what M2K is doing right now matters more than the other two. On the 1-hour chart, M2K is trading below its WMA. The moving average has flipped from support to resistance. Each rally attempt into the WMA gets sold. The SMA at 2,869 is also overhead. That is a compressed resistance cluster. 2 moving averages converging into the same price zone, acting as a ceiling. Here is the trade setup. On the 15-minute M2K chart, TrendSpider auto-detected a falling wedge. Upper trend line declining, lower trend line declining, but at a slower rate. The classic converging structure that typically resolves to the upside. Price reached the apex of that wedge during the session. The Donchian and Bollinger bands both show a contraction in volatility at the exact same time the wedge reaches its tightest point. That combination, a falling wedge compressing into the Donchian Bollinger squeeze on the 15-minute, is a textbook setup. Not a trade yet. A setup. The trigger is a break above the upper falling wedge trend line on the 15-minute with volume expansion. If that happens, the measured move on M2K targets back toward the 2,075 to 2,900 zone. If MES simultaneously breaks above the diamond pattern's upper rail, you have confirmation across two instruments that the broader equity bid is returning. So here is the full verdict across all three. MES. In compression. Diamond pattern on the 1 hour. Do not trade the range, trade the break. MYM. Cup and handle on the daily still technically valid, but short-term sellers are in control. Watch the handle low. If it holds, the daily setup is still alive. M2K, the clearest setup of the three. Falling wedge on the 15-minute with a volatility squeeze. This is the one I am watching most closely. If M2K triggers, MES and MYM likely follow. None of these are signals to act on right now. What TrendSpider gave us today is a map. 3 instruments showing where the pressure is building. The trade comes when price decides where to go. And when it does, you want to already have your levels marked. I am using TrendSpider for all of this analysis. The auto-detected channels, the wedge patterns, the Donchian and Bollinger overlays. If you want to run this same setup on your own charts, the link to try TrendSpider is in the description. And if this kind of top-down walkthrough is useful to you, subscribe. I do these every time a setup lines up across multiple timeframes. See you on the next one.